This is Japanese Economic Review Channel. Yesterday, July 14th, the Japanese equity market demonstrated remarkable resilience despite global geopolitical headwinds. The Nikkei 225 closed at 67,743.50, gaining 500.77 points, while the Topix rose 31 points to 4,038. This session was marked by a decisive afternoon rebound that effectively neutralized the negative momentum inherited from the U.S. markets. Analyzing yesterday's performance reveals a clear macro-to-micro transmission. While global sentiment shifted toward risk-off due to rising tensions, the Japanese market successfully absorbed these early shocks. A robust capital rotation into domestic demand and infrastructure allowed the Nikkei and Topix to surge in the latter half of the day, resulting in a 2.1% gain. The primary market catalyst was a social media announcement by President Trump regarding a renewed naval blockade in the Strait of Hormuz. This unilateral action, including a 20% tariff on regional cargo, triggered an immediate spike in crude oil prices. The sudden fear of supply chain disruptions forced a broad market shift toward inflation vigilance ahead of Tuesday's trade. The U.S. markets on Monday, July 13th, felt the brunt of these inflation fears. The Nasdaq suffered a 4-day losing streak, closing down over 408 points as capital fled high-duration growth assets. Major semiconductor players, including SanDisk, ARM Holdings, and Intel, led the liquidation, creating a difficult opening environment for Asian markets the following morning. Despite early pressure from Middle East uncertainty and volatility in the AI sector, the Nikkei 225 staged a dramatic recovery yesterday. After a weak start, buying pressure intensified in the afternoon, pushing the index to an intraday high of 67,800 at 2:31 p.m. JST. The market maintained its strength through the closing bell. Market breadth was exceptionally strong yesterday, with over 70% of stocks on the TSE Prime advancing. Specifically, 1,185 stocks moved higher, while only 327 declined. Liquidity was massive, with a total trading value of 10.76 trillion Japanese yen. This high volume confirms that the afternoon rally was driven by strong institutional conviction. A systematic capital rotation was evident throughout the day. Investors moved away from U.S.-correlated tech and machinery sectors, such as Disco and SMC. Instead, heavy inflows were seen in inflation-resistant commodities like INPEX and JAPEX, as well as domestic services and infrastructure, including OLC and various utility companies. The TSE Growth 250 Index also rebounded yesterday, moving in tandem with the prime market. While companies like PowerX and Cover saw significant capital inflows, the IPO sector remained selective. Terra Drone and QD Laser faced downward pressure, and the recently listed Go also saw a pullback despite the broader market rally. Looking at yesterday's final indicators, the USD JPY stabilized around 162.33. Meanwhile, Nikkei 225 futures maintained a strong peg at 67,800 by the 3:45 p.m. close. This strength in the futures market indicated that bullish sentiment remained sustained even as after-hours trading began. In conclusion, the market performance on July 14th confirmed the structural resilience of Japanese equities. Despite severe global inflationary pressures and immediate geopolitical shocks, the market demonstrated robust internal liquidity. The decisive rotation into domestic demand effectively neutralized external tech sector volatility, underscoring Japan's current stability in the global landscape. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.